Hi guys, welcome to my channel. This is Forex with Temilo, and if you are joining us for the very first time, you are welcome. Please click the subscribe button. On this channel, we talk all things Forex, and if you are a returning subscriber, thank you for subscribing and welcome once again. In this video, I'll be doing a back testing on Euro USD. This back test is not a long back test because it is a recent price action that I saw in the market this week in the foreign exchange market, and it was on Wednesday, which was the 14th of February, the same day as the Valentine's Day. And on that day, I did not take a trade because usually um, a day after any big news release, I usually try to avoid trading in the foreign exchange market because I've found out that most times, not every time, most times price tends to trap me, and price action is usually not so so good. So because of that, I always avoid trading a day after big news releases like CPI, like NFP, and like FOMC. But on this, coming to my chart on Thursday, I was able to now realize that price actually gave a good entry on Euro USD for a buy trade. So it's that buy trade now that I'm going to break down for you so that you can use the same approach to take few short trades in the foreign exchange market. So now we are on the 4 hours time frame. I have got my chart back. This was the CPI. This was the CPI news on Tuesday, if I'm right. And if you look to your left, you can see that price traded into a demand zone. Okay, this demand level right here, price traded into this zone. Okay, and why is this zone, why am I picking this zone? This zone is a valid zone because it has the presence of imbalance, and not just that, this zone caused a break of structure to the upside. You can see right here that this eye was taken out, it was broken by this impulsive move to the upside caused by this demand level right here. So now moving to when we had the CPI price tapped in, and if you are with me on this channel and watch my videos, you know that I'm always against taking zones from the getting into an aggressive buy entry or sell entry from a higher time frame, such as the 4 hours daily or 1 hour. I always like to go down to the lower time frame, look for confirmation entries before getting into trade. And if I'll get into aggressive entries, that means the aggressive entry must be from a lower time frame. So now this is about 39 to 40 pips in stop loss, which is way too much. So because of that, we'll wait for a confirmation in this zone right here. We'll have to wait for a confirmation on the lower time frame in order to get into a buy. And if you remember carefully, when you have price trade into a demand level or supply level, you want to go on the lower time frame and look for internal structures. Okay, we'll find internal structures like this on the lower time frame, and inside those internal structures there will be mini break of structures, and it's from those mini break of structures that your um you identify your imbalances and mini supply zones. Then you can now take a confirmation entry buy. Why do we wait for a confirmation entry? We wait for a confirmation entry because if you should take aggressive entry sometimes at this zone, price can push way down. Okay, that confirmation gives you, just like the name implies, confirmation. It gives you the confirmation that okay, price is actually going your way. For example, if you are trying to buy, you get a confirmation for your buy. That gives you the confirmation, the assurance that at least price is going your way. And if you are selling as well, price will give you a confirmation to go for sales. Another big question to ask is the question, why are we buying? Why do I suddenly want to buy from this zone? Why I'm buying is because when price dropped all the way from this high right here, market left behind huge imbalance right here, and this imbalance is what we call unhealthy price action, because you can see this large bearish candle do not contain any bullish candle. It just dropped massively, leaving behind a gap between this level and this level. So later on, price will always come back to fill up those levels, okay, because price was not efficient at that particular time. Okay, so this is the reason why we are looking for buys. We want to capitalize on the fact that there is a gap right here, there's a space right here, and trade with price into this level and make some money out from the foreign exchange market. So now that price has hit this zone, you now want to go down to your lower time frame and start marking out your structure. So remember, we are back testing right now. So this was from Tuesday, the CPI day, um up to Wednesday. So anytime you see this box, I talked about this box. This box, I did not draw them there. Is my indicator, the Q zones and Asian range and Q zones. So if you have it turned on your chart, you'll be able to get this as well. So now this is the Asian session from the previous day, and now we are on the 14th of February. So on the 14th of February, you start marking out your structure to know what you want to trade. Okay, so let's just start looking for possible entry. So we are on this day, on the 14th, we'll start looking for trade opportunities. So now from here, you start marking out your structure because we want to buy. Okay, we can see that market created this high. Let me remove this, we don't need this anymore. You can see that market created this high. Let me move down to a lower time frame. You want to go down to be able to mark out your structure. So you can see that this Asian range high was taken out with this leg. We had this, we created this high, market pushed down, created this low, market push up, created this high, and this high created this low. We had another high right here, then we moved down to this low. Actually, if you look at price action very well at this level, you see that this is just price going up and down. So on this particular day, for me, I would just prefer to see a break above this high before I have a strong confirmation that we are going to be buying. Actually, you can look for a break of structure from this high as well, but this is kind of not so nice price action. But for if I was on the chart on this day, I'll be waiting for price to break this high or probably break above this high so that I can have a solid confirmation as opposed to this internal one. But if you are looking at this internal break of structure, you actually see that when price broke above this high that tapped into this level of demand, markets created this level of imbalance, and price has now come back to fill this imbalance up, and this would have been a good entry for a first trade. Okay, but for me, this zone looks not so good to me, so I'll prefer to see a break above this particular structure right here. So let's just play, let's see what happens. Let me go to the 5 minutes time frame, and market is now pushing. We are yet to still break below this low, so that's still our low. Let's wait if we will be able to see a break of structure. Yeah, and you can see right there, market broke above this high, giving us that break of structure, giving us that confirmation for a strong buy. This was broken, this was broken. So now we'll look for zones where we have imbalance. Can see from this zone right here, we have imbalance right there. Let me cut back. So after price has broken above this structure, we will start looking for zones where we can take buy trade, and this zone is a valid internal demand zone where we can take buys from. So at this point in time, I'll be looking to enter right here if I was trading on that 14th. And for stop loss, your stop loss can be right here. But for me, I always preach about aligning your trades to breed. So if I was in this trade, I will have my stop loss at this low right here. And for take profits, I always like to look for um zones on the higher time frame, like 1 hour, 4 hours zone. I want to look at zones where I can take profits from. So I may go to my 4 hours and look for zone. Right here we have this supply zone at this level right here, with and the start of this imbalance that is right there. So at this point in time, if I was in this trade, and as a day trader, I always want to close out every day. I don't like leaving my trades overnight. So at this 4 hours point of interest for imbalance, I might just take my profit. And if you go down to the 1 hour time frame to also look for zones where you could take profits, you can also take your profits here. And this is for people that love to hold trades for probably over a day. You can have your take profit there. But for me, if I was on this trade, I will take my profit at this 4 hour level, because price can reverse at any time. Sometimes if you've backtested a lot on your charts, you know that at some point markets may not get up to this 1 hour point of interest. Markets might just reverse back after tapping this H4. Okay, so let's move back to a lower time frame and see if we'll be tapped into this trade. So let's see what we have. Markets came back, and this is our entry points. Market has now come back to fill the imbalance that we have right here. Market tapped it perfectly, went above, breaking above this next high as well. So if you're unable to get into a trade right here, this is yet another opportunity to trade again if price should come back, retrace back into this zone. Let's see. Yeah, you can see market came back into this zone. So if you missed that first point of interest, this second point of interest now can be your take profit zone. By then you reduce your stop loss, because now we're broken above about three zone. We've broken this, and we've broken this. So price does not really have a reason to come below this area anymore. So that's 2 points of entry. And let's see if price continues. So now price is moving all the way up. Yeah, as you can see, the day ended in the New York session, and take profits was not actually it. So now coming to the next day, which was Thursday now. On Thursday, when I came to the chart to look for trade opportunities, I saw what price was already doing, and I was then looking to join in for a sell entry on Thursday. And where am I looking to sell? I'm always on the chart during the London session. As you can see, outside of this box is the London session. So I came on the chart. Let me just remove this. And I was looking for entry opportunities. So now at this point in time, I took out my Fibonacci retracement rule from this low to this high. And as you can see, I always like to buy from discounted zones, 61% zones and 78% zones. So at this level now, I'm looking at this side for how I can get into a buy trade on this side. But as you can see, all of the price action at this level, all the price action seems efficient. That is, the way price was properly filled. Like you see, we pushed up, market retraced back into the demand level to mitigate correctly. We pushed up, market came back to mitigate correctly. We pushed up, market came back. We pushed up, market came back. So price was actually efficient at this level. There are no zones that are clear. Okay, let's go to the 30 minutes time frame. Let's see what we have. Same thing on the 30 minutes time frame. But I was like, there's no way all these zones can be so filled up and perfect. I went down to the 5 minutes time frame, And on that 5 minutes time frame, I was now able to cite this level of demand right here that is unmitigated. Okay, so at this point in time, I was looking for a retracement. I was expecting price to retrace down into this level so I can get into a buy trade, but price never came back to that zone, to this zone right here. I even had my zone extended way up to this level so that when price reaches probably the equilibrium 50% of the Fibonacci retracement too, I will get into a buy trade, but market just ran all the way up. So probably if I've traded on that Valentine's Day, maybe I would have gotten into this trade, but there was no reason for me as I do not always like to trade. I already got some trade from this massive push down on the CPI day. So market just ran all the way up and take profit was it. So if I took this trade on the 4 hours time frame, my take profits will be it from right there. And for those that took the 1 hour supply zone, they would have also have their take profits to be it. Okay, so this is how you use the smart money concepts to get trades in the foreign exchange market. So with this knowledge now, you see that we are able to capitalize on this imbalance. Imbalance plays a huge role in trading. We are able to capitalize on imbalances to take your entry, to take your exit, and to trade into them. Like for example, this one now, we traded into this imbalance right there and it was filled. Okay, so I implore you guys to watch out for imbalances in the market so you can capitalize on them. And I took a sell trade today around this level of supply. I think I will make a separate video on this supply zone that I took a trade from, instead of going over it on this particular video. Why is this zone valid? This zone is valid because it caused a break of structure. This low that created this high was taken out, and where is the zone that caused that break of structure? This is the zone. So I was able to get some sell trade. Was it on EU or on GU? I can't remember now, but I took a sell trade, I think on this same EU, if I'm not mistaken. So guys, that is it about backtesting. So you can see, look out for supply zones just like this. Look out for demand zones just like I showed you at the beginning of this video on the 4 hours time frame. Mark them out. Wait for confirmation entries at those zones on the lower time frame. Get into your trade. Mark out strategic points of interest for you to exit your trades once you get in, and always remember to have your stop loss at all times, because markets can just suddenly push at any point in time. So always have your stop loss set and also your take profit. That will be all for this video. I hope it was of value to you. I hope you gain one or two from it.